properly. So I've drafted up a couple of PDFs. I'm going to put these in the group as well, so obviously you guys can have a look through. So one of the main charts, so if I just go on the 2 hour time frame here, one of the main charts that we're going to be looking at this week and for a while is yields. All right, and more the overview of yields here. Yields are obviously U.S. government bonds. Um, and obviously, for those of you who don't know, there was a conspiracy actually, which I read the other day, and it was about is Trump the worst president, or is he? This is just someone's kind of theory. Is he the gonna? Could he potentially be the greatest prime minister? So one thing about Russia. All right, for those of you who don't know, for those of you who know, I apologize. Russia are a self-sufficient country. They don't have to import very much, if anything. All right. And obviously, they've built, I think they were importing drones, but obviously, this Ukraine war has obviously moved their budget into, they're obviously even building um, their own, words left my head, their own, defenses, so they don't rely on anything. They've got obviously, minerals, oil, everything that they need is internal to Russia. Now, obviously, what's North America got a lot of? So, for those of you who don't know, the biggest supplier or no, not supplier, the biggest, um, do you know what? Words are leaving my head tonight. So, say the biggest storage of oil. There's another word which I'm th thinking, storage, whatever they've got, massive oil. So the biggest holder of oil at the moment is Venezuela. Um, and I think obviously then you've got Iran, then obviously you got North America and Canada. All right. So what's Trump done? He's obviously taken over Venezuela. All right, so he's got that oil. He's on about making deals with Canada too, and then obviously North America have got their own oil supply. So if he cuts off the strait for long enough that it almost collapses the economy, where's everyone going to be going? They're going to have to start going to North America, him for obviously their oil. So it's going to be a lot, yeah, whether it's a power play, whether it's true, but that would make North America pretty much, self-sufficient. If he also manages to capitalize on Greenland too, he will have everything that he wants. So, it's an interesting way of looking at it. Do I believe in it? No. But obviously, it's, yeah, kind of the reason, obviously, I was explaining this was the one thing that America have, that they've also got 35 trillion in debt. Now, who owns their debt? Their debt is backed by government bonds, all right? And their debt is owned by China. A large proportion of US government bonds are owned by China, Japan, Europe. All right. Those are obviously the, main kind of three there. China, Japan, Europe. Now, if so we could, or anyone could decide, China obviously probably being the biggest threat to, sell all their US government bonds. What's that going to do? That's going to crash the dollar. Now, obviously, they don't want to do that because obviously they like to control it because obviously everything, and I mean probably, yeah, probably majority of trade is conducted through the US dollar. All right, in the FX markets, the US dollar is the power currency, always has been, always will be. So obviously it's very, very important. All right. So yields are obviously going to be what we're going to be taking a look at. All right. And obviously this is why. Now I've done two PDFs. All right, for everyone here. All right. So I'm gonna read through this. I'll put it in there. And obviously then we can open up for questions. And then I've got, two scenarios of what markets potentially might be pricing in. So right, what everyone thinks is driving the markets right now, right? What everybody is focused on, retail is um, Iran, oil prices rising, war headlines, risk off, sentiment. All right. That's a surface level view, but if you stop there, you're trading like everyone else, and that's actually where people get caught. So obviously that's why we like to go under the bonnet a bit and obviously try and focus on potentially things that everyone else isn't really looking at. So what's actually driving the markets? The real driver now isn't oil; it's the bond market, like I explained. When oil rises, inflation expectations rise. That pushes yields higher. Higher yields tightens financial conditions. All right. So the market is being driven by liquidity and financial conditions, not geopolitics. Three, markets are trading politics, not fundamentals. Now, this is an interesting one, and obviously we'll go through it. Markets right now are reacting to headlines, policy decisions, sudden reversals, tweets, and sentiment shifts. All right. This creates fake breakouts, liquidity traps, and sharp reversals because the market doesn't trust the direction, it reacts to the decisions. All right. So, we've all seen recently there'll be a tweet, normally from Trump, and obviously that is what's driving markets. But all these drives are all short-term drives. They are not, long-term, hard, concrete data. It's almost, yeah, tweets, hearsay, in regards to obviously what is actually happening. All right. Four, real trade policy pivot pricing. All right. So this is where it gets interesting. Smart money isn't asking, is oil going higher? All right. They're now asking, at what point does policy change? All right. Because we've obviously worked our way throughout the last year. Every, central bank has been obviously dropping interest rates. All right. And obviously, they've got to a point where they need to continue dropping. However, what this war is doing, right, it's creating inflation, with obviously oil going higher. And obviously, that's, putting pressure on anything. All right. So they're asking, at what point does policy change? Because if market falls, pressure builds. If pressure builds, policies, soften. If policies soften, then markets rally. So what happens? Bad news eventually becomes good news. The fake recession setup. Here's the bigger macro picture. Oil rising is inflation pressure. Inflation equals, fewer rate cuts. That's why recently, no central bank has cut interest rates, and there is a little bit of worry. Everyone's kind of monitoring what's happening. So obviously, what does rate cuts create? All right, when interest rates are, low, what does that do? That increases spending. All right, because it's cheap, isn't it? It's cheap to borrow money, so then you can spend it on building your business, really. But obviously, we can also spend it on buying a car, buying a house, buying a watch, buying this, buying that, credit cards. What is this? What is all credit cards and etc. It's everyone else buying stuff from companies. So obviously money is, flowing and obviously exchanging hands. That's good for an economy to a point until everyone's borrowing gets a bit too high, risk gets a bit too high, and then they increase interest rates again to stop everyone borrowing so much money. All right. So, that's kind of how, how obviously every country's like a parent. Or obviously my daughter, she's the older one, she's 13 years old. If I don't curb her a bit, she's going to be spending. All right, naturally, normal girl. But obviously, a country does that on a much larger scale. They're the parental figure, and obviously they, make sure that everyone is, doing what they're supposed to do. But obviously, the ideal scenario is everyone is handing, money around, and obviously, as it's all being handed around, governments take a bit of tax here, a bit of tax there, a bit of tax here. So, yeah, the most mid un misunderstood part about oil. Most people still think higher oil is bad for the economy, but the structure has changed. The US is now a major oil producer, like we discussed earlier. So higher oil hurts consumers, but supports other parts of the economy. It's no longer a simple risk-off trigger. What's really happening behind the scenes? This is where it gets even more important. There have been consistent signs of large positioning before major announcements, moves happening before news becomes public. That's why you see sudden spikes, stop hunts, sharp reversals, because the market isn't reacting to news, it's positioning ahead of it. Now, we've all, seen this. There was a massive position. I think it was about a week and a half ago. Everyone was, rumored that it was Trump's son, whose name has also left my head. But obviously, apparently, as the tweet happened, like 20 minutes before, there was a massive, short on oil, and he or whoever it was, he, she, they, them. um, they got out at the right time, and made about 100 million. So no one knows who it is, but obviously they presume that potentially it's it's happening all the time. That's why it's probably the hardest conditions you will have as a trader. So for anyone who's been trading for a year, I feel, sorry for you, because it's very hard. Yeah, before, and the year before that has been easy because everything's been trending one way or the other, especially gold. Gold's been so easy to trade, whereas obviously now it's a bit harder because we're not just dealing with your stereotypical macros, fundamental, even technicals, because obviously, I hope we don't ever have to have this argument, but macros drive technicals. Technicals are for entries only, all right? But it's macros which are driving the direction, the overall market. And of course, everything is a bit messed up because no one knows what's happening. There's no clear direction. And of course, that is expressed in market condition. So, how do we approach this as traders? All right, we shift away from chasing breakouts, blind trend following, and instead focus on liquidity zones, extremes in price, and reaction points. And this is something that I'm going to be marking up and going into a bit more detail on this week. So, I want to obviously make sure that we are all, on top of that. We're all aware that because of this, the market is designed to trap people. So right now, markets aren't being driven by fundamentals or geopolitics. They're being driven by real functions. If you understand what forces policy to change, you're trading one step ahead of everyone else. So I recommend, I'm going to put this PDF in. All right. And, I will, feel free to obviously to go over it again. All right. Next thing, right? What are markets pricing in right now? All right. At the moment, markets are not moving in one clear direction, which has been pretty obvious. Yeah. If you look at what's been obviously happening here, even the dollar, if my chart will, load here. It's been all over the place, especially this week here. It's last kind of week here has been, messy as hell. If you look, we've had this price here, all right, where it's been all over the place. Been breaking lower, equal high, breaking lower, looks like it's approaching an equal high. So we obviously have to be a excuse me. We obviously have to be aware that markets could do anything. All right, so we do need to be careful of this. So where did I get to? So yeah, instead they are reacting to two possible outcomes. If inflation stays high, all right, so we can obviously judge judge this with, CPI data, PMI data. If inflation stays high, markets will stay cautious, right? If policies, start to change once everyone feels a bit more comfortable, hopefully this war will end, policies will change, and then everyone's going to feel more comfortable. Obviously, markets will become more positive. Understanding these two scenarios helps you stay prepared instead of guessing. So, scenario one, markets pricing in higher inflation, which is what we've got right now. All right, if this ceasefire, the 2 week ceasefire is supposed to end on Tuesday, so obviously we are, hoping that it ends, but obviously if it doesn't end, this is the scenario here. So this is what markets are currently leaning towards. What's causing this tension with Iran? Rising oil prices, inflation concerns staying high. What does that lead to? All right, interest rates staying higher for longer, which is what we currently have. Bond yields staying high, stronger US dollar. All right, what this looks like in the market, USD strength, gold struggles or moves sideways, sell rallies, stock market under pressure, sell rallies. All right, simple way to understand it. When inflation stays high, money becomes more expensive. All right, this usually supports the dollar, slows down stocks, makes gold go harder to trend higher. Right, scenario number two, markets pricing in policy change. I'm going to move this one down for the PDF. So it's on a different page. That's right there. There we go. So this is the opposite outcome and often happens quickly. What could trigger this? Markets falling too fast, economic pressure increasing, political pressure to support markets. What does that lead to? Possible rate cuts or softer policy, falling yields, and weaker US dollar. What this looks like in the market, obviously, same but the opposite. So, simple way to understand it. This when policy becomes supportive, money becomes easier. All right. This usually weakens the dollar, supports stocks, and pushes gold higher. All right. The most important thing to understand, you do not need to predict which scenario will happen, so don't worry. Instead, focus on this. Watch how prices react at key levels. Let the market show you which scenario is playing out. All right. So don't worry. I know I've breezed through this, but I don't want to take everyone's evening. You might need to obviously read this up a few times. But obviously, all in all, this is why we're looking at yields. I don't know why my internet is slow. I've got really good internet here and it's messing me about. Right. So that's obviously slowly have a look at obviously what's been happening here, in regards to yields and what could we be kind of focusing on. All right, yes, you could technically argue we're in an uptrend here. All right, but if we get rid of this here, right, what I would kind of angle here is yields. Let's just go on a daily here so we can kind of see has got a couple of barriers here, right? We've got this one here, which is struggling to break, and then this one here as well. Oh, so which we need to include, right? So we've got these here, all right? If these two break, all right, we're gonna have scenario two, all right, where dollar will tank. All right. And yeah, we're then gonna see gold start to push up a bit. And then we'll obviously see stock market start to recover. So yeah, it's all that's why it's really really important. What we've seen in yields, apart from Friday, actually, we had this mass drop Friday, and that's why I don't know. I'm gonna see what happens, in regards to gold, on market open. I can't really predict which way anything's gonna go today, but obviously, if yields start to tumble, then obviously, yes, gold, very, very, very very similar kind of scenario here. We got this level here, which is holding up, extremely well. We did try and break through. We're now kind of testing it if we extended it a little bit. Currently trying to test it. If we break this, yeah, we're going to be looking at potentially coming back up to these areas here. All right. So obviously these are all things that we need to have a look at. But I think the extreme, move of this, the extreme sort of tail off on yields here might mean that we are going to get a little bit of a recovery before, this move continues. But everything, yeah, is, politically based. It's how confident they are. It's how much it's documented, commentated on, and yeah, that's kind of the overall outlook of what I'm going to be looking at this week in the, markets here. All right, because everything is kind of in, let's go on like a 4 hour time frame. Everything's kind of in, no man's land here, especially like GBP, USD here. Yes, you could argue that there's a big, tail off here. But I don't think that is. If we look at this on a daily time frame, pretty much closed where it opened. So I am very, very, yeah, I'm just not sure obviously what is gonna happen here. We just need to stay vigilant and see obviously how markets are reacting as opposed to trying to predict what is gonna happen. We've got to like I always say, and obviously why we trade hard data, macros. And trend, whether we're trending up, trending down, trending, sideways, messy trending, we can still identify trend. So we've always got to be obviously putting ourselves on the highest probability, mark. But I think that, yeah, this is obviously what we are looking at here. So yeah, but let's, wait and see obviously what happens. So yeah, right. Let's open it up for some questions. That's it, Phil. Baron Trump. Right, Sean. I was reading the other day, France by 2028 will be in negative GDP, which I found mad due to ongoing aging and not enough young labor to cover pensions. I think France is a bit of a mess anyway. Europe is pretty much propped up by Germany, as much as obviously everyone might not want to admit it. I do feel sorry for France. They're kind of the center point of Europe, and I just yeah, it's we were having this conversation the other day. Who was I having a conversation with the other day about France? And it's a tricky place to try and obviously manage. But yeah, it's gonna struggle struggle for a bit anyway. So Alex, is it possible to use Bitcoin as an indicator on how the market will open tonight? Not really, no. Let's have a look at Bitcoin. I mean, you can't really say that Bitcoin's done anything. If we look at how it finished Friday for kind of finish that. Let's have a look on a daily. Yeah, I wouldn't really say Bitcoin's done anything. Yes, if Bitcoin was trading down here, you might argue or trading up here. You might argue, yes, you could utilize Bitcoin, but I don't think it's done anything. So yeah, if we did look at this on a weekly, yeah, we've obviously got strength here, but yeah, there's a little bit of hype in crypto, at the moment, because obviously Trump has, just spoken about crypto, and obviously that's what's recovered it a tiny bit. But yeah, I don't think you can. What do you think will happen with yields if war in Iran ends? DXY will potentially drop, but would this mean yields would drop as well? Yeah, that's what would and will happen. So yeah, I do think that yields they're not going to drop off the face of the earth, but if you look at yields, they're comfortable and happy, probably within this middle range here. So yes, they can drop down to, potentially 3.85%, something like this. Oil will be the main driver. I mean, look how much oil dropped on, these last couple of weeks. We've gone from, above 110, back down below, sort of 85. Will this continue? Who knows? We've obviously going to have to wait until Tuesday for this to, kind of happen and capitalize. But yeah, it's very, very messy kind of market conditions at the, moment. Even USDJPY was looking like it was going to recover a bit, but obviously then that is again, if you want to mark consolidation, that's what happened, last kind of week, nothing, or last few weeks, nothing really has been happening, so it's just been up and down. There's been no continuations, nothing. It's a very, very hard time to trade. So, stick with us because if, yeah, obviously everyone in the markets is, finding it hard. So yeah. Uh, any more questions? Let's have a look here. Will the market be quiet tomorrow because everything is waiting for Tuesday? No, Mondays have been pretty active. So let's have a look at this week overview. So Monday. Obviously, got inflation data for Canada. Even though I don't trade the Canadian dollar, would still find this interesting. For those of you who don't know, they were obviously the first economy to recover from COVID, so they're always interesting to have a look at here. We then got so we've got unemployment rate for the UK, and then we also got some retail sales, etc., for the US dollar. We then got inflation data for the UK, which obviously will be quite interesting. Got lots and lots of UK data this week. We got some more inflation data. Got PMI, plus we got Europe inflation data too, and then obviously we've got some PMI for the US dollar as well on that Thursday, and then Friday retail sales again for the pound. And that's about it from us on Friday. So yeah, yeah, very, very much a pound dominated week. That's what we're going to look at. Hopefully, if we can, kind of err on the fact that, it should, yeah, if we can get it correct, then yeah, we should have some very, very good pound trades this week. So that's what I'm looking out for. Gonna try and obviously capitalize early on GBP as much as I can. Ahmed, hi. Thanks, Dan, for the sessions. Amazing work. Appreciate it. Auto copier working awesome. Planning to put more funds in. Interested in taking your course for learning. Please share some more information. So if you drop me a message, what I normally do is I do a one-to-one, and then obviously I'll give you the course for free. And obviously that normally works very, very well because then obviously, we can go through where you're at and obviously what you should be working on and stuff like that. So yeah, but no, I'm glad the gold copy is working well for everyone. It's smashing it. So yeah, everyone should be happy. It's just gonna carry on taking over. So yeah, does anyone have any more questions? Any more for any more before we end? I'm actually pretty buzzing for this week, if I'm honest. I thought we were a bit unlucky in the end. Well, all week last week, really. I thought we obviously had everything on point. It's just like I'd said, because we're trading. Yeah, and obviously I've really done a bit of a deep dive today, but because obviously we are trading politics, it's not something that I've ever really looked at. Obviously, you have to follow politics if you're in this industry, but obviously it's not something that I've really, really focused on. But obviously, yes, it's one of those where yeah, we've obviously got to keep an eye out for everything, make sure we're keeping everything tight. I kept, stops tight, last week. So yeah, and I'll probably do it again this week. Archie, not really a question, but found it an amazing insight. The video you put in the inner circle around psychology, mindset behind trading. Yeah, no, do you know what? It blew my brain. All right, how they will, how, not all hedge funds, but obviously, lots of hedge funds look into the, mindset of they've got like whole departments which are looking into the, mindset of, yeah, basically the retail industry all the time from current data. It's just mad, and obviously how they categorize us. So yeah, because as much as you think that you're not a retail trader, anyone who's not in a hedge fund is a retail trader. So yeah, no, no, really, really interesting. Right, Alex, these Sunday evening sessions are so great. Thank you so much. No problem at all. Skid, brilliant as usual, Dan, even with your brain buffering earlier. I don't know what's going on with it. It must be, Sunday. Do you know what? I hit the spa all afternoon yesterday, and obviously all this morning. I've just felt exhausted. So yeah, nice, obviously good night's sleep, and then we'll be all ready for tomorrow. So yeah, really, really looking forward to this week. So yeah, right. Have a great evening, everyone. Appreciate you all obviously turning up, and obviously I'll put this recording in and I'll put the PDFs in. Yeah, and let's, smash it. Let's absolutely smash it. Have a good one, guys. Have a good one.